Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brandon Kawal, Principal at Advisor Growth Strategies, to discuss how advisors are looking beyond their platforms to find a scaled partnership with growth opportunities and the resurgence of M&A in the RIA space. Brandon, it is great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
You got it. And what are the big themes that will define the RIA and wealth management space over the next year or two?
Well, I think we're going to see a couple of things that will be very important over the next year or two. The first being talent. Roughly 289,000 financial advisors in the space. It's been that way for a couple of years now, somewhat flat, and really a tight labor market behind it. And wealth management has sort of been this booming market, wealth being created, people need advice. But these platforms to look to scale and grow need talent to do it. The second thing that we're seeing beyond and related to that is really organic growth. Choppy year in 2022 from a market perspective, historic interest rate increases made things a little bit challenging out there. And I think firms are really focused on how do they grow sustainably, and talent's a big part of that for them as they think about their value proposition to the market and how they serve the end investor. The last piece is really that platform that, to use the word you mentioned earlier, is the value proposition and the platform you create to bring it to the market. Technology, the services you're offering to the market, and really how you put that all together to grow and scale and become more of a player with the end investors and serve all of their needs. And then the last thing, you put all those together, and we expect M&A to continue. It may not look the same as the last couple of years, it's particularly in the registered investment advisor space, but we do know it will continue because we think the fundamentals are there.
Why is M&A continuing in the wealth management space while other industries are slowing down?
I think it's because of the way this industry, one, it's fragmentation, but two, the foundation of the industry is very different than we've seen in the past. And what I mean by that is, you have financial advisors, people-centric business. There's been somewhat of an aging population that has been out there, but really an industry that's had a lot of success. So when you look at platforms trying to really grow and scale, M&A is a useful way to get there, and not only to add additional services, but to find people. The other thing that we're seeing out there is this industry has been discovered, particularly the independent wealth management space, by outside capital. I mean, private equity, family offices, a lot of investors on the private side have found this space and find it intriguing. You have a lot of fragmentation and you have a lot of opportunity ahead as the end investors continue to create wealth and need advice to serve it. So we on one side, you're looking at supply being really driven by aging advisors and the need for scale. And then you're looking at demand through outside capital and really the need to grow. And you put those two things together and M&A continues on.
Yeah, it sounds like 2023 could be a strong year for it, and especially if you start to look 3-5 years out, because to your point, with an aging population, you're going to need people to service them, and not only the next generation to help them manage wealth, because you don't ever want to fall into that trap where, okay, one generation created it, the other one never had to worry about it, and now they have to understand how to manage it if it's never been, spoken about before. So not only from an employment perspective, but it just sounds like the industry overall is potentially ripe for longer term growth and acquisition activity.
Yeah, absolutely. I think that's spot on. And you look at for years now, and we're likely to see this continue. The advice space is pointed towards independence, right? RIAs and everybody. There's room for everybody, but there's just a need for advice, and investors need it. There's a room for people to compete, and have employment, to your point. So I think the outlook is very strong for the industry, even with other, challenges in the market.
Yeah, I mean, even 2022, while it was challenging, it's almost the best advertisement for advisors, right? I mean, you can't necessarily get talked off the ledge when you don't have someone to help you through that. So with that said, some of the challenges we did face were higher interest rates. Has that impacted what you're seeing with M&A in the RIA space?
It has, and I think maybe the way it's impacted M&A is, I think it's made some of the buyers in this space and some of the names that are out acquiring quite a little bit more selective, right? I think in years past, the access to capital and the cost of that capital was pretty low, and it was pretty, there was a lot of access and there was plenty of it. I think as we look forward here with the historic interest rate increases last year, and continuing to some degree, they're really selectivity is going to probably be the theme that we see from the buyer space. Doesn't mean it's going to stop, and we certainly don't think it will grind to a halt by any stretch. But I think what we're likely to see is buyers be a little bit more selective and use deal structure, in a little bit more of a balanced way to accomplish their acquisition goals. So it has changed it. It definitely is altered the complexity and the characteristics of M&A in the space. But I think that's just an adaptation because the cost of capital is up.
And finally, Brandon, what changes or steps are you recommending advisors consider in 2023 and beyond?
With a very tricky market last year for the first time in a while, and really the changing end investor demographic, the competitive demographic is the competitive structure of the industry is changing. When we think about technology and talent, services, things like that, coming to leading and defining sort of the leading firms in the space. Our first recommendation is just be educated. Pay attention to what's happening in the M&A space. It's giving you some signs around what it's taking to be competitive and where others see the industry going, and really understanding what's happening around you. That's the first. The second is really making sure that you are thinking about professionalization and the way you're engaging and retaining talent in your firm from here going forward. Very tight labor market, very competitive for strong talent in the space. So we're really suggesting that firms, really be educated there and really look at their value proposition, not just to investors, but how they're attracting people and really strong employees as well.
All right. Appreciate the insight, Brandon. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.